What's up, my good people? Happy Sunday to you all. Hope everyone had an amazing week. And the Potter here again, and today I'm back with another banger analysis for you guys. But before I dive into today's episode, I want us to first review a couple of trades that I called out on the previous video I made, the last video on my channel, and how all of them has played out so far. And some of those trade setup I called out, AUD USD was one of them, which if you look, this is exactly where I called out AUD USD for a massive drop, and I'm going to be showing you guys the reason why I called out this short and what is behind it. But first of all, I want to tell you guys, if you are new to my channel, please subscribe to the channel, and if you find my videos helpful, feel free to join the Telegram group where I come on every trading day to share my trade setup, which you can add to your own analysis to help you make better trading decisions. So one of the trade that I called out on the previous video that I made was AUD USD, and the reason why I called out this trade is looking at the CFCT data and the retail sentiment. And if you have been following me, you will know that I trade using the supply and demand methodology, combining with the CFCT data and the retail sentiment to help me make my trading decision. And I monitor my trades with EMA 200. So I called out this trade because on the retail sentiment, the retail traders was already maxed out on their short position, because when this market was rallying to the upside, retail traders was busy adding to their short position, believing that this market was going to continue dropping from here, but that didn't happen. So they added to their short position till they got to their max out number, which is around 95%, 97%. And based on that, I've been tracking the retail sentiments for a very long time, so I know how it works. I know that when the institutions, which are the people that moves the market, are buying, the retail traders are selling. So I use the retail sentiment to monitor what the retail traders are doing, and I use the CFCT data to monitor what the institutions are doing and trade along with them. So when this market was rallying to this upside, the retail traders was busy adding to their short position. So when they got to their max out number around here, which is a supply area, and this supply area here has been removed, but based on that, after that the next candle closed inside, I didn't remove it because it's still kind of valid. So I used here to know that, okay, since the retail traders are on their max out number and the CFCT data is showing me that GBP USD long position is already maxed out, and I know that if GBP USD is going to drop and euro was already dropping, that this market is likely going to drop as well, because the retail sentiment has already maxed out, but the data was a little kind of bullish. But I know that for the past 3-4 years now, that the institutions that move the market hasn't really been that interested on longing AUD USD. Even when they add to their long on the data, you will see that it won't be that effective on the market. So based on, I track the data and I already know this, so I use only the data of Euro USD and the data of GBP USD to make my trading decision and the retail sentiment. So I called out this trade, and look, ever since I called out this trade, look at how massive the pair has dropped so far. This is over, let's calculate how many pips, though this is where I closed my position, but let's calculate how many pip AUD USD has dropped so far since I called out the trade. Okay, this market has dropped over 355 pips, over 355 pips so far. So if you cut this massive move, by now you will be smiling in the bank just like me. So let's look at GBP USD. Okay, look at GBP USD. Let's look at GBP USD data to show you guys what I'm trying to explain about them being maxed out on their loan. You will see that this is the CFCT data. I build spreadsheets for my data where I collect the data every week. I add them to the spreadsheet to determine the the side that the institutions are focusing on, because you can't just go to the website and look at the data and expect to make use of it properly. So I collect the data every week and know which side they are adding aggressively and which side they are not adding, or they are taking profit, or when the market is neutral. And you see that the max out number on long position for GBP USD is 188,000. So let's scroll down. Look, when they got to 188,000 here, you see they start taking profits. So a lot of things happen around this area, which I'm not going to go into detail. But what I was actually trying to explain to you guys is that based on that we track the CFCT data, I knew that massive drop is coming, because GBP USD, when it was around this area here, look at what their number was. It's 8th position here. It was on 90 when it got here. So based on some markets error, when this market pushed to the upside here, it dropped here, then it went back to something like 80, then they start adding back. So when this market was pushing to this upside here, the retail traders were already giving up on adding more short, so they didn't add more short here. This market was just market makers pushing this thing out to make sure they take out every early seller on this market. Then when this market contacted this supply zone around this area here, and the market was on 88% short here, this is where I started looking to short this market. Actually, I shorted around here based on the data, because on the data here I saw that okay, they have started taking profit. Look, ever since they got to 88%, look, they started taking profit, adding back, taking profit, adding back here. And look what's happened here. 3 weeks ago they took 3,000. 4 weeks ago, which was October 1st, they took 3,800 profits on long. They took 5,000. They took 11,000. They took, look, you can see they are they are still taking profits on their long position, and they are not really doing much on their short right now. That's why we are not seeing that aggressive drop. So the drop that has happened so far on GBP USD is based on the profit taking on long, because on their shorts here we can see that for the past 5 weeks now, their shorts they haven't been interested in adding shorts. So the drop we are seeing is based on the profit taking, so you should be careful. That's why it's not dropping aggressively. But on Euro USD, look at Euro USD. Look at Euro USD. See the profit taking 9,000 on long, 4,000, 4,000, 16,000. You see how aggressive the profit taking on long is. Look at the adding on short. You see they are short 3,000, 6,000, 11,000, 17,000, 29,000, 27,000. You see the way aggressively adding on short. So here it's very clear that it's not just profit taking that was drawing this market down. The adding on short as well was part of what was making Euro USD collapse. Look at the drop. You can see that the drop here is more neat and much bigger, based on the institutions are interested in shorting. So I hope that with what I have showed you guys, you can with this exactly where to trade on, because this is not the pairs that I'm interested in working on this week. So which other pair that is among the ones we called out on the last video? Okay, we called out a Euro AUD, and look at Euro AUD almost hit our target. And I as well uploaded this same trade on the Telegram group more than 5 times. Like, one thing with me is that I don't, any pair that I'm interested in trading, I will upload it a couple of times before it will play out, because I want people to, people that follows me, people that look at my trade setup, to as well, take advantage of those trade setups and make money from it. And look, I actually closed my own trade somewhere around here. I closed my own position somewhere around here. I couldn't wait for it to hit my take profits, because I knew that there's going to be a pullback. there is a possibility that this market will continue pushing to the upside here, but based on what I'm seeing on the AUD USD data, data is very bullish. So that's why I quickly get out of this trade, because we might see a pullback to this demand zone around this EMA 200 here before we start seeing continuation. So I will be waiting for that deeper pullback. When I see a deeper pullback, I will start adding to my long, because this one I'm only interested in longing it. But I'll wait for another trade opportunity to occur here. So let me dive into the main pairs that bring me into doing this video today, which the main one is gold. If you have been following me, you will know that since July or August I stopped trading gold, because gold wasn't really clear to me, and because of the data as well, I discussed to not trade gold. My trading gold is jump in and jump out, catch a short move, then I jump out of the market, because I've been waiting for the institution to get maxed out on their short and start seeing them adding on their long aggressively. And this is where I started shorting gold, I think around 2750, which is around here. This is where I started shorting gold, because of this 2750 is the United Bank of Canada, I think, target on gold for the year, which I think their target is the highest I have seen on all the gold forecasts, both JP Morgan and all that. And when the market got to this 2750 on the CFCT data, gold is almost to their max out number on long. And look at, let me show you guys the max out number on gold long. The mastered number on gold long is 408,000, and gold got to 387,000 here, very close. Like, this is a difference of just 7,000 more to get to their mastered number completely. And if you look at what has been going on gold here, you will see that ever since gold short got to 48,000, they have been slowly adding to their short position steady. They are not taking profit, to tell you that the big money that are moving the market know what they are doing. This is the first time that gold will ever hit this all-time high of 2750. And if you have been on the game for long, by now you should understand that whenever market hits a new all-time high, we are going to see a massive deeper correction on the market. It might take time before it will happen, but it will surely happen, because this is something I have witnessed on the market for the past 4 or 5 years now that I've been trading the forex market. And look at what happened here. When gold data got to 48,000 on their short position, look at what they started doing. They added 2,700 on short, they added 5,900 on short, they added 2,001 on short, they added 12,500 on short, they minus 2,000, they added 591, they added 304, they added 4,500 plus, they added 12,000. Sorry guys, they added 12,003. You can see that they are steady adding to their short position. Like, they are slowly building that short. On some time they don't add aggressively, but look, 2,000 is not really aggressively, 5,009 is a little aggressive, then 2,000 is not aggressive, 12,500 is very aggressive adding. Look at the minus 2,000. So yeah, and if you go to good chart to check, you see that since when they started adding this to their short, when they ever since they start adding to this short position here, gold is rallying to the upside. So even when they are adding all these to their short, gold is still rallying to the upside. So based on that, I have been tracking this data for long. I know that even as the market is rallying to the upside, what the big monies are doing is that they are collecting all the sells on the market. All the retail traders that shorted earlier, they are collecting those sells. That's why they keep rallying that market to the upside. But on the same hand, they are building a massive short underground. So as long as I was that's why it's good to have a spreadsheet and track this data. So I was tracking the data and I was seeing the game they are playing, and I was just telling my friends and a couple of people on the Telegram group that these people are playing game. And I was just smiling because I know what is actually going on. So I know that okay, they are not yet interested in dropping that price aggressively, but I know that they have already started building their short. So look at what happened here. They are building short, and look at the long position here. They took 12,000 profits, they took 4,000 profit, they added 849, they added 29,700 on long, they added 17,800 on long after taking profit for a couple of weeks. Then again they took profit again 17,000, they took profit again 21,000, they added 8,000, they added 14,000. Look, what are you noticing? Ever since they got to this 387,000, you can see that their position is reducing. Ever since they got here, which is their last 17,000 adding, then they took 17,000 profit, they took 21,000 profit. You see, 378, 380, 348. You see their long going down. Then they added back. They added 8,600. They added
I don't understand.
They added.
I did it and then back. They added 1,600 and then. But I could search the web for it.
Sorry, guys. So they added 14,300 on their long. Now we are seeing another 5,001 profit taking on the long. You can see that their long is not going up, like they are taking profit on their long from 387,000 to 366,000. You can see that they have taken over 20,000 plus profit on their long. Then their short position went from 48,000 to 87,000. You see that they have added close to 100%, because 48,000, 87,000, this is over 95% adding to what their short used to be. So their short has grown massively while their long is reducing. And looking at good chart right now, you will see that the market, this is imbalanced, though it's not really clean, because I would have loved something like a little green candle, like this little green candle here, this first red to be a massive 2-to-1 imbalance candle. But even at that, you can see that this market, this is area where the big money started making their intention known on the market, that they are now interested in shorting gold. Look at this, is a massive money was offloaded in the market. That's why we saw this drop, and this little pullback is this now. So what I'm expecting on gold, we are going to trade gold step by step, though my overall target on gold is to drop massively. But first of all, I'm expecting gold to come to this area, or probably take out all these two demand here. I'm expecting gold to take it out. This is the first place, and if it takes out here, it comes here. Once gold takes out here, it won't just be dropping down. We will see something like drop and pullbacks. That's when we are going to start adding more to our good position. Currently right now I'm still holding my good position, which I think I shorted around here or around here. I don't really know, but I know my good position I'm currently holding short on good around this area. And let's look at the good daily time frame. Look at the good daily time frame. You can see this is the zone I was waiting for market to hit before we start seeing that aggressive dropping. And when it got to this zone here, which is 2750, look at this massive bearish engulfing candle, and this is a new supply zone. I haven't worked on my charts, I have been busy lately, and I'm actually going somewhere today. That I'm just trying to quickly make this video for you guys before I get ready to head out. So you can see this is a nice supply zone created on daily time frame now. So I expect this market to drop, to come to this zone. Then here, this is the first place I'm expecting. I might actually short good once the market open. I will just add to my position around this area, because this bearish engulfing here makes sense, and it's 2-to-1 imbalance. And Friday candle, they struggle, try pushing it up back, then at the end of the day it end up as a bearish candle. This is actually a nice short. If you short good from here, can hold it to here, you might see something like this possible. Then here, this is nice. This is nice, though I'm expecting good to drop more than this. But I'm expecting good to have a deep correction, but we are going to be trading it step by step. And this is a nice setup on good. This is a nice setup looking at the data. So this is a nice setup. Let's look at what's the next pair that I'm actually looking to trade. Okay, silver and SP500 as well. Okay, this one I'm already holding about 2 short positions here. I'm holding about 2 short positions here. I expect this one to start dropping from next week. There is a demand zone around this area, but I don't think I see the need of drawing it out, because it's very wide. So as this one is taken out, I know there is a massive zone around this area, so I don't want the chart to look too tattered. So looking at Usdcad here, I'm already shorting Usdcad 97% short. Okay, and look at here, you can see we are on a critical zone area. There are a lot of reasons why I'm actually interested in shorting this bad boy. A lot of reason. Looking at the data here, let's go to the data. Okay, looking at the data here, you can see that the master number on long is 219,000, and when the market got to this 219,000 here, they started taking profit, and the market dropped, which we trade all the drop. So after this drop, they start adding back. Now they are on 194,000, very close to 200. So, and is close to a very solid zone. There is a possibility for this market to rally into this daily supply around this area, which if it rallies to here, I'm going to add to my position. But what I'm actually expecting to see is something like this. Yeah, that's what I'm actually expecting to see here on this market, because it's already maxed out. And let me give you guys some more details on this. Sorry guys, my network is slow. I hope this loads. If not, okay, something I want to show you guys here. Okay, look, the last time that we had a big drop on Usdcad was, their retail traders short position was around 18,500, and we saw that massive drop. And the last time we saw this massive buying that is currently on, their long position got to 23,400 before they started closing their long position, and the institutions took over the position and rallied the market to the upside. Right now, the retail trader short position got to 20,300, which is bigger than the previous 18,500 that they used to drop market aggressively. Then this is exactly where I started shorting, because I believe that this market was going to start dropping aggressively. 21,300, which is bigger than the previous drop, but unfortunately that didn't happen. It kind of give a little pullback, then we start seeing this more push to the upside. So when I saw this, I think my first shot was around this area actually, then my second shot is around here. So when I shorted here, this market pulled back here and started rallying to the upside. I just laughed, and because I know that what is actually happening here is the institutions trying to take out everybody that shorted early here, all the weak hands. That's why I don't really trade with stop loss. Yeah, I know that some people will be like saying this is crazy, but that's just the simple truth. I don't trade with stop loss. I only use stop loss on some trades if there are trades that maybe they are already on profit, so I add stop loss. I move my stop loss in case if it started pulling back, maybe when I'm not around, let it just close on profit on so area. So I just add stop loss then, and move it. When market make higher high, higher low, I move it to the next zone. So in case if I'm not around and news or something start happening, the market start dropping, it just got to that zone, it would close me on profit, so I won't lose all the profit that I've made. That's the only reason why I use stop loss. So I'm actually holding two positions here. So what happened, let me explain to you guys what happened. When I saw this 96%, which was on 21,000, which is aggressive, that's when I start shorting, and you can see the market dropped a bit, then start rallying again. When I saw this, I laughed because I knew that the big monies are the ones playing this game. They want to take out everybody that started shorting early here, all the weak hands. They want to make sure that there are no sellers on this market before they will start dropping price. So all these retail traders that are shorting aggressively, shorting to 96%, they want to make sure they liquidate everybody before they will drop price. That's why I don't trade with stop loss, because knowing that this market is going to drop, but the people that moves the market want to take out my stop loss before dropping it. So why will I allow them take out my stop loss? After taking out my stop loss, then they will now start dropping price. That's why I don't use stop loss. But I don't advise you to do the same unless you understand how it works. Because one thing with me is that I use a very small loss size and add to the positions. That's how I trade. So my loss size is always small, but I hold trade for long and catch 1,000 pip, 2,000 pip and all that. That's how I trade and make money. I use small loss size to catch big trades. And I'm actually planning on adding to my position here. Maybe when the market opens, I will look at how the market is reacting to, then I will add to my position. Let's look at what their short position is currently on right now. Okay, the short position is currently on 21,200, which is much aggressive than the previous 18,500 that they used to move price. And look at the last position before they drop long position is 23,000. So 23,000, 21,000, you see is very aggressive. So we should expect, almost the same amount of drop exactly as the buy. Like this my this my trades, this my short that I'm holding. This is the area that I'm planning to take my profit. And let's measure and see how many pips that will be. If you take profit here, this is over 460 pips, and if you take profit here, this is over 550 pips. So imagine that you calm down and catch this trade. All you need is use a small loss size, manage your risk, know the things that you look at, for you before you start making trading decision. So I don't think I will be going into a lot of pairs today. SP500, I'm holding shorts here as well, and I called out this trade on group. I've been calling out this one for months. We can see look at the drop, though the data is a little kind of bullish, but this market is due for correction because it's been on all-time high for a very long time. A minor demand zone on daily time frame has been removed, and right now looking at this chart, I don't see anything holding it from collapsing to the downside, though it might have issue on this area. But once it's able to take out this area, which I believe is going to, I don't see anything holding it from coming to these zones. So S&P 500 is nice to jump on. Silver, I don't really trade silver much because I trade gold, and silver is already dropping more than gold. You can look for short trade on silver as well. You can look at short trade and silver. Look at silver 4 hours. You can look for short trade here. Which other pair am I going to? Okay, I'm holding trade here. I'm holding shorts here, which I got in somewhere around this area. I'm still holding my shorts. Euro CHF. Which pair? All the JPY pairs is looking nice. JPY pairs is looking nice, but I'm actually looking to trade New Zealand JPY. I was holding this trade, but I closed it out because I figured out that this boy is not ready. So I closed it out. So what I'm actually waiting for right now is to see this market do something like this. Once I see a candle close above like so with solid bullish, I will long this market and held it all the way to here. So this is all for today's episode, and I hope you guys find this video helpful. I'm just which other pair should I look at? Nothing much. DSY, okay. DSY is very bullish, but I'm expecting to start seeing a drop on DSY soon. Well, there is a possibility of DSY coming here before we start seeing any drop, because if you look at this Friday candle, this is a massive bullish engulfing on a demand zone. You remove a supply zone here, new demand zone got created, came back, retested it, then jump off of it with this massive bullish engulfing candle. So guys, I hope you find this one helpful. Sorry guys, I'm going to stop this video here because my voice is already cracking.